Well, we're pretty much almost a month into the new U.S. administration led by the Donald, a.k.a. the Mad King. And we've seen a flurry of executive orders and tweets and decrees on a variety of things that have variety of areas that have created a fair bit of chaos and uncertainty in a variety of areas. And so the question is, as investors, how are we supposed to figure this out? We're investing. How do we make decisions in this new kind of dynamic that we're into? So this mind map is going to try and come up with some. We're only, as I said, we're less than a month into this new presidency, and so trying to see if we can see if there's any kind of underlying themes that are emerging out there, and potentially what kind of investment opportunities that could foster. So let's see if we can pick some stuff off. Well, based on so far what's come out of the Mad King. So one of the first areas that's jumped out, that seems to be jumping out, is this whole concept of literally going back in time, like literally like a hot tub time machine, where we essentially like rolling back. He's basically talking about rolling back financial regulations, essentially going back to dereg financial services, and basically circa 1999. And ultimately, a lot of the issues and the angst and the pain and suffering that went through the financial crisis was due to a lot of this deregulation. So right now they're looking like, and the Congress is looking like, they want to go back in time to that period before the financial crisis. So how is that a good thing? Well, one way that when I think about it is, as much as it's a bad thing, it's a bad idea, the reality is the time leading up to that financial crisis was a very strong and very lucrative time for banks and financial services. So thinking if we actually go into a hot tub time machine and take us back to 1999, maybe I'd want to start looking at some financial services companies. Maybe looking at some ETFs, buying a basket of financial services ETFs. So that's one theme that's emerged. Second theme is revolving around trade. We're seeing a much more protectionist bent by the Mad King. So if this actually plays out, and this protectionist mindset is actually entrenched in policy, what we could see is things like tariffs, border taxes, that kind of stuff. What does that mean? Well, ultimately what that means is anytime you get into a trade war or you get a protectionist mindset, it's usually going to stimulate inflation. Prices of things are going to go up. And if inflation goes up, you're going to have interest rates go up, because you got to protect your purchasing power. Ultimately, you're going to see stuff like the US dollar go up, which is not great for exports. So in terms of investment opportunities, if this kind of dynamic is in play, then I might be wanting to look more at companies or industries outside the US who are also going to be impacted by a potential trade war. But, I'd be looking more at outside the US domestic focus companies. And if I were looking inside, I would be looking at, ultimately this type of dynamic is not very favorable for consumers. So there could be a bigger push for more, discount. People will be looking for more discounted goods and services. So maybe discounted retailers could benefit from that. That's another element. Third element that seems to be gaining a little bit of traction and seems to be a consistency in commentary is revolving around, and it still hasn't really played out totally, it revolves around government spending. And he's pretty much, the Mad King has pretty much said he's going to go hardcore on defense. So if that's the case, then maybe I want to look at certain defense companies, defense and aerospace companies. Companies, ETFs. That might be something worth looking into. There's a whole, infrastructure aspect. Whether it takes off remains to be seen, but if that's the case, if there's a heck of a lot more infrastructure spending, then you got to start looking at, commodities, maybe commodity-based companies. Those kinds of construction. I'm just going to mark these out. So quickly, as you can see, there's some basic themes. If we follow these themes, it kind of leads us to potential investment opportunities that may be worth considering, that I'm going to do a little bit more of a deep dive on. Another area I'm always looking at, as I always come back to, is looking at the pillars. And despite all this uncertainty that some of this is going to cause, there's still things that we all need in society. And one of the elements we need is food. We got to eat. We got to survive. So even though there might be inflationary pressures because of trade or anything, there's still core food staples that we're dependent upon. Like basic meat, dairy, food, like basic, grains, vegetables, fruits. Maybe we want to look for, companies like, the staple, consumer staples companies, groceries. That's another one. So, as we can see, no matter what happens and whatever way the Donald takes us, we can sort of map out some potential areas that we want to take a look at putting some of our money, that may be able to withstand the pressures and the outcomes of the Donald's policies. So, something to look at.